Hi, can you all hear me? Great. So one of the largest sectors in institutional investment is coming up to be private rented, because more people, as you heard from the last panel, are renting and renting for longer. So we thought it would be nice to invite the great and good of the institutional investment world into private rented and hear their thoughts about how technology is going to make that sector to really buzz. I'll let the panel introduce themselves, and then we'll launch in, and we'll try and get as many audience questions in as possible so that you can really participate. Jamie, if you'd like to start.
Hi, I'm Jamie Ratcliff. I'm the Assistant Director of Housing working for the Mayor of London. There are certain restrictions on public officials in the lead up to elections, so I'm going to use that as an excuse to dodge any difficult questions.
Hi, I'm Alex Notay. I'm Director of Product and Service Innovation at Places for People Group. We're one of the largest development, regeneration and leisure management companies in the UK. We have 182,000 units under management and a huge range of activity in all sorts of different sectors. And I'm also the editor of the ULI UK Build to Rent Guide, which some of you may have seen.
Well, that makes what I do very sort of minimal, but I'm a consultant in the build-to-rent market in PRS. I've been in the property industry for about 35 years, principally now in residential investment, which has now become PRS and build-to-rent. And what I principally do now is I instruct people how to get into the build-to-rent market or the PRS market using their particular skill sets to inform the industry.
Hi, I'm Rob Martin. I'm Research Director in the Real Assets Division at Legal & General Investment Management. We have raised a fund which will invest exclusively in build-to-rent, and we'll go on from there.
Hello, I'm Philip Nell. I'm a Fund Director at Hermes Investment Management. We've been invested in the build-to-rent sector for a couple of years now. I've been in the property investment market for probably about 20 years, mainly on the commercial asset side, so bring a slightly different twist to the build-to-rent market.
So Rob, let's start with you. Legal & General, alongside PGGM, have got is it £1 billion fund? What's attracting institutions to private rented where they haven't been involved before?
Yep. I think it really comes down to three things. It comes down to cash flow stability, inflation hedging, and diversification. You're quite right. PGGM is one of the major sources of capital in this strategy. They are a large Dutch occupational pension scheme. Like many pension schemes, their liabilities are becoming increasingly mature. So when pension schemes are in their immature growth phase, they tend to have a lot of capital allocated to growth assets, to equities, where they're trying to get a lot of return. And as their members become older and start to move towards retirement, they have to change their asset allocation to become more focused on security of income and on delivering the money that goes to pay pensions. And that's the situation that a lot of pension funds are in. So that's why these kind of factors become very important for them. So if one thinks about build to rent or the residential multifamily sector, it's got a very strong profile in terms of cash flow stability. It's a needs-based demand, and also you've got a fairly tight supply environment, so that creates a nice stable cash flow. You've also got the prospect of hedging inflation. Certainly rents in the UK, although the data's not very good, but certainly it implies that it's matched or even more than matched inflation over the long term. And then thirdly, diversification is a big theme. At a very high level, that's about diversifying away from bonds and equities, but particularly if you think about a lot of pension fund money historically, it's been in the commercial real estate sectors, and there are a whole raft of structural challenges in the commercial real estate sectors which are leading to depreciation and pressures on rental growth, and in comparison, residential is quite an attractive investment class.
So Alex, what's different between your everyday landlord and an institution managing your property?
Okay, well, I'll go back a step. So one of my kind of touchstones is that build to rent and PRS are not interchangeable terms. They're not the same thing. The private rented sector is the term for everything rented in the UK. It's what's been in the English Housing Survey for decades. So that's the flat that somebody rents out as their kind of pension for later years. It's the small landlords with 3 to 50 to 100 units, and it's the kind of everything that's in the rented market now, good, bad, and ugly. Build to rent, which I appreciate is a clunky term, but it's to try and differentiate stock that is for the institutions. That institutions were not invested for all the reasons Rob's outlined until relatively recently. So it's purpose-built, designed for rent, and that does mean you do design differences in the building, whether they're smaller units, so you're leveraging kind of efficiencies of operation. Also, it's got scale. There are lots of debates as to what that is, but to justify the level of intensive management, you're going to be needing a minimum 100, ideally 250 and up, in terms of unit size, and a long-term hold, a long-term profile for that. And that is a very attractive asset class. In the US, it's been there for 25 to 30 years. Actually, before that, much like here, the rental industry was kind of mom and pop landlords, as they call it. But there was a realization that, A, it's very stable, that there is a growing, but and it's never going to be the whole market, but a proportion of the rental market who are lifestyle renters who choose to rent for reasons other than they can't afford to buy. In fact, CBRE did some research recently that said 25% of UK renters that they surveyed rented for reasons other than affordability. So there is a choice element in there. And having an institutional landlord means that you're guaranteed that professionalism of service. I'm sure everyone in here who's ever rented in London, certainly as I have, has some horror stories, whether it's the flat that I lived in Hammersmith where it snowed in my bedroom because the sash windows had warped and that kind of thing. Renting is generally not a great experience. There are highlights in the wider traditional PRS. There's some really good, well-managed stock and good landlords, but the lack of regulation means anybody can be a landlord and it's a bit of potluck. The great thing about what's coming within these institutions is the standards and the professionalism that hopefully is going to permeate through the wider sector.
And so, Jamie, in creating this new supply, what's exciting you from the point of view of the GLA?
So I think the fundamental driver is getting more homes built. So our big challenge is we're building little more than half of the homes that London needs, and relying on speculative sale models from traditional house builders just isn't going to bridge that gap. We need a lot of new models, so we need something that operates in a different way. We need a lot more affordable housing as well, but I think build to rent has got the potential to really ramp up supply significantly in that you can deliver large sites much faster. You haven't got an absorption challenge of waiting to sell homes at the rate that people can afford them and get through transactions. You can let homes much quicker than you can sell them, and it was also a business model that will operate differently through the market cycles, and therefore should be robust at different points and mean that we've got a more stable supply. But I think there's also some interesting spin-off benefits which relate more to the topic of this conference around how you then start doing homes differently. I think because of the focus on revenue streams, it means you want to get homes built and let as quickly as possible, which lends you towards what I like to call precision manufactured homes, building homes much faster to higher quality that's replicable in factories. And it also lends you, as Alex said, to looking at how you can operate a building much more efficiently in order to protect that revenue, which means you start to look very carefully at how a building's constructed, its quality, and the things that you can get out of that, as well as the data that the building will tell you about the people operating in it and the other things you can do with that. So I think it starts with supply, but there's a whole range of other things.
And Richard, when you're advising people to get into PRS, what are the challenges that they're throwing up? Sorry.
Thanks for that. Well, there's a challenge for everybody moving into a new sector, and I suppose what's interesting about the sector at the moment is that it isn't just property people who are becoming involved in it, and that's really quite interesting from a property point of view, is that we're seeing people coming into this sector now who are disruptors, who are bringing their own ideas about how it should work from other areas of business, which is a really great thing, because frankly, it's been doing what it's been doing now since time immemorial, and it's not really worked for anybody, certainly not in the rental sector. There's always a challenge in terms of funding to start with, and especially in a new, build-to-rent is a relatively new sector. And whilst there is a lot of money that is sort of waiting to be invested in it, a lot of the challenges have probably the principal challenges has been competing with the build-to-sell market initially. I think that was the biggest challenge that we had to overcome. A lot of those challenges have been dealt with certainly by the Mayor's supplementary planning guidance, where they are looking to encourage build-to-rent, and if you've seen the white paper as well, the housing white paper, you will see that government as well is looking to differentiate the way that the planning guidance is given to planners where it's going to be a build-to-rent scheme, so that we can compete on a sort of equal footing in that basis. That's always been the most difficult sort of entry point, I think. Management has been another slightly tricky one. What's been interesting being here is that I've spoken to a lot of guys who all seem to have a slightly different twist on the management offer, whether it's sort of online and the cost of doing it, and they're using technology to be quite innovative in the way that they manage stuff. And I think that's coming through. And that's another something that, in fact, Alex dealt with her initial paper at the ULI about management, how different that had to be to make a real difference to people's lives. But principally, I would say that our main challenge initially was probably competing with the build-to-sale sector.
So Gabrielle from the audience has asked, is there a first mover advantage? Philip or Rob?
Shall I go with that? I think at the moment, I mean, one of the reasons why institutions are interested in the sector is there's no yield anywhere, and people are still looking at build-to-rent as an alternative to more traditional commercial real estate, which I think is wrong. I think for the reasons already outlined, it's a completely different asset class and needs to be considered in that light. I mean, when we're investing in the build-to-rent market, we're not expecting there to be significant inward yield shift. In other words, values going up because more people are chasing the market down. We think at the moment the market looks fairly valued, and we're investing on that basis. We think the returns are going to really come through from rental growth, not some of the headline rental growth numbers that you may have read about from some research houses, but from steady, fairly highly correlated to inflation rental growth.
Let's move on to the tech aspect. Jamie touched upon, precision manufactured housing. So we haven't had the tradition of off-site housing in this country, but Legal in General are trying to push for this. Can you tell us some more, Rob?
Yeah, so Legal in General has formed an initiative around modular housing, modern methods of construction. Different people have different terminology. There's a factory that's been established up in Leeds, which is still in ramp-up phase. Just to tell you a bit about the technology, it's cross-laminated timber, and what are produced are effectively boxes in the factory from which are pieced together buildings. Now, clearly, because they come in box format, there are certain forms of real estate that actually suit that better than others, but certainly it can in theory work very well for residential, for hotels, for student accommodation, many kinds of residential. So it's a big initiative for us. I think one of the things that we would observe, and it comes back to one of the challenges, I think, which we haven't got to yet, but construction cost has been aggressive in a whole range of ways, certainly in commercial, but also in residential. And I think finding a way of reducing the cost base in residential is part of the way of combating the affordability pressures that we see in the sector. And productivity improvements in residential construction have been effectively zilch for decades now. Whereas if you look at manufacturing, if you look at services, they've been moving ahead really quite swiftly. So finding different ways of producing residential real estate, the fabric of the buildings, I think is quite an important part of how we combat some of the features of what people call the housing crisis.
Jamie, what's this going to change?
So I was just going to add that the factory is super cool. It's the biggest room I've ever been in. It's got a cutting machine the size of a double-decker bus, and there's a little umbrella on all the things which are all coloured red, green or yellow. It got me very excited. But I think the point I'd come back to is actually the question there, which was there now has been deleted, around quality. And so I think we've got a really significant problem in terms of labour shortages in the construction industry. Alex and I were both involved in the Farmer review of the UK construction industry labour model. Yeah, snappy title. Modernise or die is the hashtag if you want to use it. But so we've got an ageing workforce. It's the second oldest workforce after agriculture. 20% of the workforce will retire in the next 10 years. And particularly in London, we're very exposed to overseas labour. At least half of London's construction industry comes from overseas. Leaving the European Union is going to make that much more difficult. So we need to work in a different way there. But also, because it's becoming stretched, we are getting quality problems. You only have to look in the press, house builders, housing associations, across the board there are problems with new build, and by precision manufacturing them in factories, by thinking about the design properly, so you stack up services, you think about how a building works together rather than bodging it in a handmade way, which is how we typically build buildings in this country. You can get quality and you can get something that will last and be much better.
So, do you want to add something? Yeah, I was going to say, so Daniel's question on data is pretty timely. Do you want to?
Enormous. So data is the big game changer just in how we tackle residential. So no, the property industry in the UK is pretty slow to adapt and change to anything anyway. But particularly the exciting thing about build to rent and the lessons from other markets where, say the multifamily in the US, is that data, transparency of data, collection of data and use of data and making decisions is integral to how this sector works. And I think in an industry here where you can have JV partners on a deal who won't share their pricing with one another, that culture is quite a challenge. What's really exciting is there's lots of real efforts to try and bring things like the real-time algorithmic pricing for kind of units on the sort of revenue management side. There's all sorts of amazing tenant management software, whether that's keyless entry or self-reporting fridges that say if they're broken down and that they can be fixed before you've even got home. There's all sorts of amazing kind of tech and that information that can be used to make the management more efficient, which drives returns. And this is all about the management in the sector, but also crucially makes the customer experience better. That is a real game changer. Where renting here is all based around the Landlord and Tenant Act, which is inherently adversarial and quite a negative thing. So the anonymous question there was, would the panel choose to rent rather than own? I moved out of London because I couldn't afford to live in London to the standard I wanted, where I wanted to live. If one of these buildings had been there, I would absolutely have stayed and rented, and I would still move back. And when these get going and these guys build it and we hopefully get to build it, I would seriously consider that, because it's a different way of living without a lot of the burdens of ownership, but actually a great kind of lifestyle choice. It's not going to be for everybody, but it is actually, there's a huge potential for all the people also who have to rent, because either they can't afford to buy or they can't afford to buy now. Surely it's better to live in something that's of a better quality and a better standard than a lot of what's out there in the market. I think what build to rent can do is drive improvements for the customer all the way through, and data is going to be a really big part of that, because that feedback loop, we're currently getting hold of a landlord. I had a landlady who lived in France, and I had no hot water for 8 days in a snowy December. It took 4 days to get hold of her through the letting agent, another 3 to figure out who was responsible for the boiler, and then 2 days to wait for someone to come and actually fix it. So that is the quality of service that is expected in the rental sector here.
And can technology play a part in what are you guys seeing is being offered to you?
So, are we still on the data question? Because I think that is an important point in terms of the technology piece. As a fund manager, we love data. We love spreadsheets. We like to analyse stuff till it stops us making a decision. And that's where we roll. And to be honest, I think the market has suffered from the fact that there hasn't been that aggregated data source for a long time. That is changing. And I welcome that. We have a joint venture with Countrywide, and that's one of the reasons why we formed that joint venture, because they have this proprietary data that we can use to underwrite our investment decision making. That said, and Alex touched on the point about more openness, we are a very different society, I think, in some ways to the US, and that needs to be recognised. Will we change? Hopefully, yes. Certainly when I worked on more commercial assets, I worked in the shopping centre market for a while, and shopping centre transactions in the US are completely transparent. You see all the data on how tenants are trading. You get a load more information. In the UK, it's very, very closed. It's basically a buyer beware scenario. And I think that model needs to really change. And it comes back to my point earlier about this being, at the moment, an add-on to the more traditional real estate, or we call it real estate now because that's an Americanized term, but property as an asset class. I think this is a very different asset class. It needs to be approached in a different way, and hopefully everybody's going to be starting to share that data, because it is a big barrier.
So staying on the data question, tenants are usually really time pressed when they're moving. It's fraught. How can data help them choose better?
Well, it's a difficult question. I think currently at the moment, what's available to tenants is probably the portals, and you can one night decide you're going to move somewhere, or you're going to leave your current place because you're unhappy with it. You can spend your entire night, if you like, just searching through Rightmove or Zoopla or Prime Location or whatever it's called these days, and look to see, what you're currently getting at the moment and how it compares to what's out there in the market. I think, from my own perspective, transparency is a two-way thing, and the transparency amongst the operators is one thing, and that's one thing that's going to help drive investment decisions very much so, in terms of who's going to build what and where they're going to build it and how big it's going to be, and the sort of tenant profile they're going to have. But in the same sense, I think the tenants have got to have, to be able to grapple with, exactly what is out there in terms of what's great value for money. And I think we've talked about, and in fact, that what they have in the States is some sort of an equivalency ratio. And some of the companies over in the States publish a ratio which tells you what value for money you're getting versus what amenities that are provided. And that's something that we haven't got over here, and it's something which I hope will probably come over time. But again, it's something that currently we don't have at the moment. But technology is driving those things forwards, and the more disruptors come into the market, and especially on the sort of technology side, and those guys do tend to kind of think very much in algorithms and how they can provide more and more data. I'll come back to data again. It's something that I think that's going to really help tenants make a decision over where they live, in what kind of building they live, what sort of amenities are of value to them, and how that value is perceived and how it's marked. And I think that's going to certainly come through. Interestingly, in terms of data, I wrote to Ed Lister of the HCA earlier this week because housing associations have a really big part to play in this market that we're in at the moment. They have an enormous amount of money. They have no funding from the government now in the way that they used to have, and they have to diversify in order to create value, to create social housing for all of us. So but what they do have, they have something called the global accounts. And in the global accounts, they have count for every penny they spend in whichever department they spend it. But what they don't do is they don't separate enough of that data out to be able to tell us exactly where they're spending and exactly how that money's working. PRS comes into other tenures, which with student housing and so forth. But with a few added more fields, we could find out exactly what social housing associations are spending on build-to-rent and on their private rental sector, because they have both types. And we'll be able to work out exactly what their costs are, exactly what rents they're charging, and exactly what the market is doing in that particular area. So that's one thing, hopefully, where the HCA can sort of add some value back into the build-to-rent market.
So the question at the bottom there is really interesting. Is there any innovation to come that may bridge the gap between small and large build-to-rent developers?
So I think so I should declare part of Places for People, and traditionally where we've come from, is being a housing association. So 60,000 of our rented units are part of our traditional social housing stock. Also, we have a new fund management business, PFP Capital, which has just launched a PRS fund, and that is traditional PRS. So it's cherry-picked 1,379 units from our existing, very well-managed stock that's sort of small blocks, a couple broken, some not, and houses all across the country, good spread, and we're fundraising at the moment for that fund. So that is traditional PRS. There is absolutely institutional appetite into that, as well as in build-to-rent. We should just say that so my colleagues don't get cross. On the innovation point, yeah, absolutely. I think there's the sector that we've suddenly all come alive to. Everyone's realised student, yeah, great, that's where everyone got into sort of 10, 15 years ago. That's happened now. Build-to-rent is coming and it's happening. People are suddenly realising, whether we like it or not, we age and we're living an awful lot longer. And that an 80-year-old now is a completely different entity to an 80-year-old 10 years ago. And when you're looking at retirement housing for over 55s, and thinking about any over 55s that you kind of go, not sure that's what they want. But that market is full of very good, very small developers. I think there's a huge potential, and you're hearing lots of people talk about it, and I know Rob's done loads of research on this at LNG, so he can maybe talk about it. But I think there is a potential for bridge between small specialist retirement companies looking at retirement rentals. So one of the companies within our group is a specialist retirement rental firm called Girlings, and they, the real challenge is helping people downsize. All the pressure, in the market about people, single older people or couples living in houses way too big for them, too expensive for them to run, but that they can't get out of because there's no decent stock for them to go into, or they can't release the capital. They can't get out of the situation they're in. That, I think, is a huge area that's crying out for innovation in all sorts of areas. But Rob can probably talk about that more.
Yeah, I mean, it is kind of a specialist subject in the sense that we're passionate about it, but how much have we achieved yet? I would say is there's a lot to be done. And one of the things that, it's a very live conversation. We were discussing it yesterday. There's a distinction between, 55 plus. I mean, frankly, there are people that I report to in my business who would be classed as senior housing tenants who would be offended by that enormously. I think it actually is, there is a gradient when you have people who actually still are BTR tenants, but gradually over time, as they move into their late 60s and early 70s, they do tend to need, some at least access to support, if not day-to-day support. And then probably as you move towards your late 70s and 80s, then care becomes a much bigger part of the bigger part of the equation. So I think there is an enormous opportunity, and I think, frankly, institutions have thus far failed to engage in that market because it is dominated by some very good social housing background providers and some very expensive private providers of build to sell. And there is an enormous gap in the mid-market, and there is an enormous gap for rented senior housing. In the same way that people need flexibility when they're young professionals, they need it when they're older as well. It's a huge opportunity.
So let's take a few more audience questions. Jamie, if we could provide the same financial security as home ownership, why would we want to own our home?
So I think this is a really interesting question in terms of what is home ownership to people, and something I've grappled with for a while, and I think it's 4 things. Hopefully I'll remember them. So it's security of tenure, knowing that your home is there and someone won't take it away with you except in extremis. It's customization, knowing that you can do what you want to your space, it's yours to play around with. But it's also the fact that you're expecting some kind of equity growth. People traditionally think that investing in bricks and mortar is something that's going to bring them a financial return, which may or may not be true going forward. But crucially, it's also something where you freeze your housing costs at a point in time and you allow inflation to effectively reduce them in real terms over a period of time. If you could deliver all 4 of those things through a rental product, then absolutely it would be the same as home ownership. I don't think you can deliver all of them, so it's about what are the things that really matter to people, what do people value. Certainly the first 2 should be deliverable through build to rent, the second 2 are probably harder.
So staying on the tenant side of things, Philip, before the panel you were talking about booking systems powered by algorithms. Will innovation in private rented sector benefit tenants or just landlords?
Well, I don't think you can necessarily decouple the 2, to be honest. I mean, clearly landlords are investing in the sector for a financial return. We aren't charities, but we are investing pensioners' money. It's not big landlords trying to just make a market for themselves. This is being reinvested essentially into long-term savers. But the 2 are linked. If landlords are effectively able to deliver the product for the same quality, to the same level of service, but cheaper because they're using a different model, a more technological model, then that's got to be a good thing. I mean, we were talking before the panel about the level of on-site service. Now, clearly that's going to be a differentiator. Some people want it, some people won't, in the same way as you might want to stay in an expensive Claridge's-style hotel or a Hilton Express. They're 2 very different products, but you expect them both to be clean, you expect them both to be well managed, you expect them both to have decent on-site staff who are engaged in the whole process. And I think that doesn't necessarily diminish depending on where you are on price terms. The key cost to us, I mean, most of our appraisals are run based on something like a 25 to 30% gross to net income erosion, so that's the difference between the rent that we receive from our tenants and the net rent we effectively pay out to our investors, and the majority of that, or certainly 40-odd% of that, it comes from staff and on-site teams and that sort of thing. That's even for a relatively low service proposition model. So whilst we don't want to cut staff out of the process, because I think that desperately there needs to be a human element to this, I think the idea of absentee landlordism is hopefully a dead phenomenon. I mean, it was very prevalent when I first started in the property investment industry probably 25 years ago, but now engagement with tenants is hugely important. We call them customers, not tenants, and that sort of thing. But I think anything we can do to mitigate the overall support costs of running that building with real people on site has got to be a good thing. And if that saves the landlord's money, ultimately that in a competitive market where we're going to be competing for customers, that's got to be a good thing for tenants.
So in the US, it's kind of gone a bit crazy where they call it the amenities arms race because people are desperately trying to compete with having, the whizziest pet spa or golf simulator or that kind of thing. But there can be really kind of unintended consequences of investing quite heavily in innovation. So the best example I always use is I went around a great property with 650 units that they'd fitted out each one with an iPod docking kind of hub in a little alcove in the walls as you came in. And they leased up the building, and it was great, and 3 months after it stabilized, Apple launched the iPhone 5. So they've now got what they've had to kind of refit as a kind of a candle nook type thing, and they're very, very expensive and made them very nervous. Now, actually, one of the hotels that I stayed in recently, which I thought was really clever, they had USB charging points, but instead of having them in the walls, they had them in the lamps. So next to the bedside table and on the desk, they were kind of USB points out of that. Now that's clever because you can move your furniture in and out as you need to adapt it. So I think that the risk when people are thinking about customer-facing tech and innovation, people get very, yes, it is absolutely cheaper to wire up everything into the building while you're in the construction phase, but the risk of, the technology moving on and leaving you behind, you don't want to be, you want to be the iPod, not the mini disc or the MP3 player. You want to be in that stage, and that's where people can get a bit nervous, and maybe then retrench to investing in the basics instead. But I think you'll see more of that as people kind of get more confident.
So, talking about service, is there going to be a WeWork that's going to dominate mindshare? Is there going to be a brand that people gravitate to as providing a service or mirroring people's lifestyles?
Well, there are a lot of brands out there at the moment, and they're all sort of fighting for brand recognition right now, and some of those are operators, and some are going to be management companies, and some combinations, and developers. I've heard great things about WeWork, and funnily enough, I was just earlier this morning, I had a meeting with someone at one of those offices, and they're great. But I don't think particularly, I think people like to have a door which they can close, and I think they like to have a brand that they really buy into, that sort of gives them the lifestyle they want. And WeWork, while it works as a sort of collaborative thing when you're actually working, I think when you're actually living, it's a slightly different thing. We do tend to use the Americans as an exemplar when it comes to build to rent, because, as Alex says, they've been at it for a very, very long time. They've made lots of mistakes. They've rectified them. They've lived through it, and they've come through with a model which really works for them. But even over in the States, and where they have their club rooms and their bars and their snooker rooms, TV rooms, and workstation rooms, they've made mistakes where the WeWork thing probably wouldn't work. They do have that in the States, that WeWork have moved over to micro apartments that are a part of the WeWork thing. And the feedback that I have had personally about that is that those apartments are just too small to work properly for the people who are working from them. They don't mind that space when they're working, to be able to hot desk or micro working spaces, but not when they're living. They want some space. And I think that in terms of brands, people clearly, brands are everywhere around us all the time, and people prefer Apple over Samsung, or, Jaguar over Porsche, or whatever, whether it's a car or clothes brands particularly. And I think that brands will always be important. It's being able to tap into that right brand, into the zeitgeist of the time that actually fits within everybody's thinking. I think if I was going to pick one out at the moment that seems to have done that quite well, I would say Live Homes have kind of picked up and run with it really quite well at the moment as a management company. And I think they're making some inroads into the business and saying the right things, and the website, has the right feel to it. But, there are others too.
I'm just pretty skeptical of a brand as a property management company. I think people choose a place to live because they like the space, they like the amenities that are around, they like the place. And I think you might want to brand a building, and you want to kind of sell the benefits of why living there is so great, but kind of imagining that people would choose you as a landlord because you've got a nice logo or a funky name, I'm just pretty skeptical of. And I think kind of my limited experience at looking to the US sort of tends to back up my assertion that Greystar took me around a load of their properties in San Francisco. I went to two blocks on the same road, a mile apart, and a one-bed flat in them was 100% difference. So it was all about the building. It was nothing about Greystar's brand. It was about the amenities that are being offered there.
I mean, the key story in the US was always Archstone. So Archstone was the biggest operator by miles, and they were huge. They even expanded into Germany and Holland for a while. And then they just got slightly too big, tried to do an acquisition that all went horribly wrong, and they were basically eaten up by two of their biggest competitors. Now, they had gone all out on branding everything. So every building was Archstone, Boston Common, Archstone this, Archstone that. Their thesis being, and they said they had lots of data to prove it, that they had residents in a much more mobile economy who would choose to live in an Archstone building when they were posted to a new city because they could trust they knew what they were going to get. And there was a view that really worked for them. I think you can see much more, as Jamie says, not just in San Fran, but across the US, most operators are kind of going for much more subtle branding. So yes, branding around the scheme and that kind of, or the place branding being really important, but stepping away from branding just to their entity. And I think that's probably what you'll see more of here. So the essential livings, the fizzy livings have very strong branding for their offer. I think the importance of brand there is that regardless of what amenity you've got in the building and the price point, the customer service should be the same. And that is the key thing about the sector.
Just to make a follow-up point on that, one of the ways in which technology, I think, has real resonance in this space particularly, let's think about what brand is. Brand is an assurance of what you're going to get meeting your expectations. And in an absence of information, that's very important. Knowing what a Mars bar is very useful before you buy a Mars bar. But if you can go online and find out what a Mars bar is, and it could be named anything, because you can crowdsource data from people who already live in a particular building, I think the advantage of brand from a customer's perspective kind of falls away. And you do then fall back on, is it a nice place to live? Can you afford it? Is it close to the tube? And all of the things that we all make decisions based on.
So we've got a lot of questions from the audience. James, would you mind just clearing the top 3 Slido questions so we can move on? Just a quick question on if PRS is successful, how different will the world look in 10 years? What are the secondary effects? Rob, you're the research guy.
Shall I have a go on that one? So look, the question that we haven't answered, and is a great question, is would the panel choose to rent rather than own? And I think for me, the really exciting future is that actually there won't be a choice eventually, which is that you could choose to live in a BTR facility and you could change jobs and you can move city and you can have great levels of service and a sensible price point for the amenity that you pay for. But then you've got organisations like my own and Phil's who are running property funds that own those buildings. And so you can still have a stake in the housing market without buying the house that you live in. So actually you are not forced to make a choice anymore, because we've become used to the idea that you have to buy your home. And if you remove that choice, then you, I think, unleash all kinds of flexibility for people, which I think will be hugely advantageous in terms of labour mobility and being able to adapt people's lifestyles to their needs as they move on.
Third question is definitely not one I'm going to answer in a pre-election period.
So just so you know, the question is the government squeezing out traditional mom-and-pop landlords?
Well, I think to the future look point, then the idea is that hopefully that the experience of renting is better. So part of the other reason that people kind of want to try and buy is because renting can be so bad. If that customer service feel has permeated through and the professionalisation of management across the piece has improved, then renting loses some of that stigma and it becomes easier and better to rent. You've got security of tenure, which is being adopted as, the 3-year tenancies as standard is something that's in build to rent that most people are signed up to. And so you know what your rent increases are going to be. You're not having to move because your landlord suddenly decided they want to sell the building. And that security is really, really important. And I do think that if that stigma falls away, then you can decide to rent. And the other is people power. The other important thing that kind of data can help do, and again, sorry to bang on about the US, but you see it there, is customer reviews make a real difference. Apartmentratings.com, Yelp, are really, really powerful feedback. Customer reviews, negative reviews have a real impact. So you'll see that all of the big operators in the US have very proactive social media teams because they have to be responsive, and if they're not, there are consequences. And I think so that's something where in the tech sector, we're nowhere near that here yet, but at least it's demystifying. A lot of these institutions are really taking responsibility by putting up and going, yeah, we're going to be your visible landlord, and we will take on that responsibility to respond to you within 24 hours, and if it's not fixed, that's on us, and we'll have to recompense you in some way. That's a huge shift in the sector.
Anyone else want to add?
Well, just on the bit about traditional mum and pop thing and whether the government's squeezing out or not, the numbers are sort of pretty much there to be seen at the moment. I mean, how the PRS as a whole, I suppose, of which build to rent is a subsector, is about, well, depending on which number you use, anything between 4.3 and 5.3 million units. And it's thought that the institutional sector is about 3% of that at the moment. And even if we do spend what is supposed to be 50 billion quid in the next 5 years, or maybe 90 billion in the next 10 years, that's only going to make another 340,000 units. So it's still quite tiny in that respect. I think what will probably change that is probably, I think what isn't taken into account, there are a lot of people who are sitting on the sidelines where we don't know whether they're going to come into the sector or not. Certainly, housing associations, such as Places for People, are enormously powerful at the moment, and I think they will represent a huge sector. Interestingly, in terms of housing associations, they can represent every tenure type and placemake. So build to rent is part of, social housing and affordable market rent and shared ownership. So they can really put the whole package together. They really are in a position that nobody else is in at the moment.
Thank you very much.
Thank you. Thank you, panel. If you give them a round of applause. Thank you very much.